Hello, I'm David Jones, and a slightly different video this time round. It's about, I think about half an hour long, this video. I was invited to do a talk just over a week ago at a traders conference in London. And I chose as the topic, why do most people lose? We know that 70% of traders lose money. I've been trading for the last 25 years. It was exactly the same when I started trading back in the mid 1990s, and that number will stay the same. So I thought, let me do a video trying to explain the reasons why traders lose, and if you're struggling with your own trading at the moment, giving you some ideas on how hopefully you can address that. So that's really the whole point of this video. I really do hope you find it useful. I've drawn on my experience over the last 2+ decades to put this together. If you do like the video, if you can like, subscribe, all the usual stuff, and if I get a bit of traction, I'll put some more videos along similar lines out there. If you have any questions, feel free, leave a comment down below and I'll answer any questions in the comments. You can email me direct, more than happy to answer questions via email. My email is dj@davidjonestrading.co.uk. I do run a WhatsApp group where I update throughout the day, markets I'm watching, trades I'm running. If you use the code 20, you can get 20% discount off that WhatsApp group for the first month. Go to the website to find out more. And there's a link in the description to all the stuff I talk about today. But anyway, so let's get into it. Why do traders lose? What is the holy grail for being a successful trader? Let's get started. Okay, let's get into this. This is a presentation I did a couple of weeks ago now at a trading event. So I thought I'd put it out on YouTube. It's a bit longer than usual. If you find it useful, please like and subscribe or comment just to help the algorithm get this out there. Obviously it took me a bit of time to put it together, a bit longer than the normal videos. So I'd appreciate it if you do find it useful. You can help give it a bit of a push for the algorithm. So the whole topic here, if 70% of traders lose, what do I need to do differently? And there are things definitely that we can do. Before we get into it, why am I qualified to talk about this? I started trading in 1996. Clearly very different approach to trading back then. There was, or actually how you traded. There was no online trading. You had to call your orders in. That's what I used to do. Lost money for many years. Very hit and miss approach again, which I think is a common experience for plenty of people. Mine was no different. I searched for a holy grail. I spent a lot of time, months, perhaps years actually, in the beginning, trying to find the magic system. And my favourite magic system. So my favourite magic system back then was slow stochastics. Here we go. This brings back memories. So I wasted a lot of time trying to find the perfect combination of slow stochastics for trading the FTSE, an overbought, oversold indicator, giving a buy signal when it crosses down here, giving a sell signal when it crosses up here. And I really was looking for perfection. So searching for that holy grail. Then what happened? I grew up. I realized after trying to find a strategy where 80% plus of my trades would be correct and would make money, that perhaps that wasn't what trading was all about. So I looked at trading in a different way. In my professional life, I've worked for various brokers in the trading industry for about 18 years, off and on, from 2004 to 2022. In that time, I've spoken to 10,000 plus clients. And the interesting thing is that the same issues keep coming up time and time again. Whether I was speaking to somebody in 2005 or speaking to somebody in 2021, it would be the same issue. So markets have changed. The way of trading has changed thanks to the explosion of online trading. But actually the issues that people have are still the same. So this for me is why I'm qualified. I think twofold. I've been through it myself, and to get to a point where I am consistently profitable. And I've spoken to thousands and thousands of people over the years who have the same issues that I had. So I thought, let's see in this video, can we have a look at these issues and see how best to try and fix them. So for today, for this video, I'm going to go through why do people lose? You know, we know that 70% plus of people are losing traders. Brokers these days have to put that information on their website. You know, there's no getting away from it. You know, if you're a broker regulated, at least in the UK, you have to put this information out there. Doesn't really help from a marketing point of view to have that information out there. You know, it brings home just how hard trading is. And it is hard, you know, and that number probably is never going to change. You know, in 50 years' time, I'm sure it'll still be around 70% of people lose money. So the challenges faced, common challenges, I'm going to go through that and possible fixes. What steps can we take to try and fix that? That doesn't guarantee we're going to be a profitable trader, but at least if we know what the hurdles are, we can take some steps to try and at least fix those. So first of all, let's look at why people lose. And it's not because of getting the market wrong. On the whole, and we'll see this in a second, people are, you know, reasonably good at predicting which way the market's going to go. The reason why people are losing is a bit more complicated than that, but fairly straightforward once you see the reason. So most retail traders are gamblers. They probably just don't realise it. Now, I am a retail trader. I'm not one of these pompous idiots who thinks that they're better than everybody else. I trade for myself. I'm a retail trader. So whether you're trading with, you know, $100 or £100,000, and you're trading for yourself, you're a retail trader. But I think most people who come to trading are gamblers. They wouldn't think of themselves as a gambler. Obviously, people who have a gambling problem, there's a risk they will be attracted to trading. But I think a lot of people are gamblers without really knowing it. They're trading off tips, off gut feel. They don't have a strategy. They really are gambling. They just haven't realised it. They pay little or no attention to risk control. So they put a trade in, a lot of people, and think, I wonder how high this market's going to go after I've bought it. They don't sit there and think, okay, I'm buying this, whether it's the S&P or gold or NASDAQ or a cryptocurrency, but they don't think, well, if this goes wrong, where am I going to get out and how much am I willing to lose? So it's a lack of attention to risk control. And if you're not managing the risk, then you're probably going to end up in the 70% of losing traders. They're too short term in their trading. Something like 50% of trades are closed out within the first hour of opening the trade. I mean, I only found that out a few years ago. I should have known that sooner, given I've worked in the industry for so long. I find that quite incredible, to be honest. Traders, retail traders, trading in that short-term time frame aren't even giving the trade time to work out. I'm in a trade at the moment, right? I'm recording this on Friday, October the 4th. The non-farm payrolls have just come out. I've been in this trade since Tuesday. Let me show you. I've been long the S&P. I bought the S&P on Tuesday of this week at 5,700 with a stop about 40 points away, down at 56.60. And I've been in the trade, today's Friday, so Wednesday, Thursday, Friday, for 3 days. And the market has just flip-flopped around, right? So I've completely switched off, to be honest, what the market's doing. But I have paid attention today because the non-farm payrolls came out about 40 minutes ago. And then it's finally got a move on. I can finally move my stop on this trade. And it's worked well. You know, so far I'm up about 45 points. It's been a profitable trade for the week. But I had to be really patient in this trade. So I think it's important to understand that just because we've decided to put a trade on doesn't mean the market is going to move like that. So for me, a big change in those early years was moving away from being too short term and appreciating the market is going to take time probably to move in my direction. And the other problem people have, I think it's a combination of lack of patience and fear about their profit disappearing, They can't run profitable trades. They do not cut their losing trades. So two sides of the same coin here. When people are in profit, and you'll see some stats later on in the presentation, they'll jump out very quickly. But when a trade is going against them, they'll sit there and hope it comes back. Here, here's an example. So I bought the S&P at 5,700 on whenever it was, Tuesday. Later in the session, the market did move to 57.30. So I was 30 points in profit after a couple of hours or so. So I could have come out of the trade. But for me, with the rules I have for my approach to trading, that wasn't enough. So I had to sit with the trade. And I've sat with it. And at the moment, it would have been it's about 50 points, 45, 50 points in profit. So again, it's having that patience. And I think maybe it might go higher. We'll see. We'll see how the rest of the day goes. And you can check this. I did it on the 4th of October, 2024. Let's see what happened with the S&P after that. But for me, I'm quite happy to run the profitable trade. Yeah. And if a trade goes against me, I've absolutely got my stop loss in place to take me out if I'm wrong. And if you address these issues, then if you have these issues, assuming you do have these issues, you have a fighting chance of being profitable. So it's not about what sort of indicators you're using, what sort of color candlesticks you're looking at, how long are your moving averages. It's the real basics around running profitable trades and cutting the losers. That really does go to the heart of trading. So let's talk about gambling. If people are gamblers, they're trading off gut feel, which might be okay for a couple of trades and be exciting, but it isn't really a sensible trading strategy. Or trading off tips. If you've got somebody who gives you tips and they're right all the time, well, that's great. But again, it's probably highly unlikely. If you're trading off tips, perhaps in the newspaper or off a friend who's bought something, the risk is, by the time the story is out there, perhaps the move has already happened. Or just chasing news. We've seen, going back to today, the payrolls move. I was in at 5,700 on the S&P. Would I buy it up here? No. So I'm not going to chase the news. Okay, if we look at something like the dollar index has had a big move off these payrolls. This is an hourly candle. Let me make it, there we go, 10-minute candle. There's the move on the dollar index. Would I chase the market now? No. So I don't want to be scrabbling after the news, because often, if you watch the payrolls for long enough, it hasn't been the case so far today, but we can get a big move and then in the next hour, it gives up all of that move. So again, I think chasing news for me is not a good strategy. And if you've got no strategy, if you're trading off gut feel or tips or just reacting to news, you've got no way of tracking what is or isn't working. Okay, how can you measure it if you don't have definite rules for buying or selling a market? What would you change about your trading? I ran a webinar about a year ago and I asked for people to send in issues they had with their trading. And I had about just under 100 responses. It was really interesting because a lot of the common issues came out time and again. I close positive trades too early in fear of losing, but I get stuck when it comes to negative trades by hoping for a reversal. This is the big problem. I've already talked about it in some of the previous slides. Jumping out too quickly from a profitable trade because you don't want to give back that profit, and holding on too long to negative trades. I think this absolutely sums up the reason why 70% of people lose. Same thing again here. I want to cut my losses quickly and let winning trades run for longer. I'd like to have more patience when it comes to closing or opening trades. So again, it's almost that compulsion to do something, and maybe a little bit of a gambling streak there, as well as obedience to stop loss. It's really important. If you set a stop loss, here's, I think, one top tip. If you set a stop loss, stick to it. So if I go back to my S&P trade, so I bought the S&P this week at 5,700 and I put a stop loss the other side of what I thought was a big level. So my stop loss went in at 56.60. So I was taking the view, right, if the market goes to 56.60, then I'm wrong and I get stopped out of the trade. What I don't do, like on Wednesday this week, so a day after I've done the trade, the market trades down to 56.72. I don't think, oh, I really want to be in this trade. Let me move my stop loss to 56.50, a bit further out, because I don't want to get stopped out. Don't do that. When you set a stop loss, have the commitment and the sensible adult approach to trading to say, well, look, if the market goes there, then I'm wrong. If I was looking at oil this week and I was thinking about going short oil, I didn't do the trade in the end, but I was thinking on this surge we had on Wednesday of this week, if I go short at 73, I want to have a stop at 75, because if it gets to 75, I'm probably wrong. And that's what the market has done. So if I had done that trade, that would have been a loser this week. It's an interesting market because maybe it's reversing this trend that's been in place since the beginning of July, but that's another topic. But if you have a stop loss, again, take an adult professional approach to trading and say, if it gets there, then I'm out of the trade. Another one, holding on to winning trades is a classic issue many face. I just can't seem to get my head around the fact I need to let them run. And the reality is, of course, you have to get your head around it. Otherwise, you're going to struggle to be a positive trader, a profitable trader, because if you're taking smaller profits and bigger losses, you've got to be right so much more than 50% of the time just to break even. It's such hard work. And as this person says, people need to stop eating like a mouse, taking small profits, and defecating like an elephant, taking big losses. And this is the number one reason this person says people fail, and I would completely agree with him. Another one down here says moving the stop loss when the trade is about to close and I'll lose money. That fear of losing money. You have to get past that fear of losing money. It's all part and parcel of trading. We don't want to, if we've decided our stop loss is going in at X level, we know what our loss is going to be. So if our loss is maybe $100, if it gets to that level, if we move the stop loss 50% away, again, because it's getting close, well, suddenly our risk management has gone completely out the window and we're taking a loss of £150, $150 rather than $100. So be really disciplined with the stop loss. Let's talk about this risk control a bit more. Fewer than 50% of traders, retail traders, use stops. Again, why? Why aren't they using stops? I'll tell you why they're not using stops. Because they're in denial. They do not want to accept that they might be wrong on the trade and they might have to lose money. They are hoping the market goes in their favour, and maybe it will, but hope is not really part of a successful trading strategy. If you've got no idea where you're going to get out if a trade moves against you, how can you possibly quantify your risk? If you're going to buy oil at 75, when are you going to admit you're wrong? Are you going to wait for it to go to 70 or 68 or 65 or 50 or 40 or 30? When do you decide you're wrong? I've seen so many people over the years blow up their accounts, have a few smaller profits and then run a trade that goes massively against them and wipes out, the profits of 5, 6, 7 trades and more. So if you've got no idea where you're going to get out, you're not quantifying a risk. And if you're not quantifying a risk, then you are a gambler, whether you like it or not. So hopefully by now, if this is new to you, hopefully there's some light bulbs going off and you're thinking, well, there is more to trading than what indicator I use. Do I use Fibonacci? Should I use moving averages? All of this stuff, everyone when it comes to trading is focused around entry points. I think particularly in the beginning, my own experience looking at stochastics and all of that stuff when I first started trading, but of much, much, much more importance is managing the trade as it goes along, making sure you've got a sensible stop loss so you're out if you're wrong. We'll look at this in more detail in the next part of the video. And when a trade's going in your favor, trying to run that trade for as long as possible. A quick talk about some of the other stuff I do. I run a couple of trading courses. There are details on my website. There's a free newsletter you can sign up for that goes out every week. Again, you can sign up direct from the website, davidjonestrading.co.uk. But what I really want to talk about is the WhatsApp group I run. I've been running it for about 18 months now. People do tend to stick around in there, which is good. I'm glad they enjoy it. If you'd like to sign up and try out the WhatsApp group, the link is in the description down below. If you use the code 20, written out 20, you'll get 20% off the first month's subscription. It is on a month-by-month basis, so if you don't like it after a month, you can go and unsubscribe, and you won't be charged. Again, in the group I talk about, in the morning, markets I'm watching, a whole mix of markets, trades I'm running. In the afternoon, the focus shifts to US markets, looking at the S&P, the NASDAQ, the Dow. It's a Q&A session that runs throughout the day, so any questions, people can fire them in and get a pretty quick answer. And I run exclusive webinars around once a month for those people in the group. So like I say, go to the website to find out more. But for now, back to the holy grail of trading, and a bit more of a look at why people lose and some simple ways of perhaps trying to correct it and give us a chance of being a profitable trader. So let's try and address the problem of being too short term. We've talked about risk control, the importance of risk control. You have to have stop losses. If you're not, you're gambling. But around 50% of trades are closed in the first hour of being open. So to me, the way I trade is a completely alien way of trading. I'm not saying it can't make money. I am saying for most people it won't make money. I think when people come to trading, they think trading is all about being really short term, and you don't have to be. Because if you're closing your trades within the first hour, quite often, most of the time, the majority of the time, you're not even giving the market a chance to prove you right. I've just closed my S&P trade. I had a break. I had the payrolls, and I closed my S&P trade. Let me show you. So I've been in this trade all week. It's Friday when I'm recording this. I bought it on Tuesday at 5,700. The market did have a move off the payrolls to 5,750. So I moved the stop and came out of the trade for a profit. But it's taken 3 days for that to happen, and the market's fallen back again. Maybe there's another trade there. Anyway, but the point is, we've had a lot of chop in the market. Just because I've put my trade on doesn't mean the market is going to go in my favour straight away. So I want to give the market a chance to prove me right. That's what it is. It's being patient. So the trade, but if I'm jumping out within 60 minutes of placing the trade, I'm not even giving it the opportunity to develop into a big winner. Let's look at this, right? I've been using this example for a long time now, and I think it's a brilliant example. If I can find it, I'll put the link to the article about this in the description of this video. So a US broker back in, I think it was 2012, looked through 43 million trades that their clients did. And what was interesting, here's the breakdown. So FX trades over a period of a few months. Most of the trades, the blue is the winning percentage. You can see most trades were closed as winners. Okay, so that on the face of it would suggest that, well, perhaps people are quite good at predicting market direction. But if more than 50% of these trades are being closed as winners, why are people still losing? Because trading is not about being right all the time. The next slide tells us the story of why people lose when it comes to trading. So even though 50% of trades are closed at a profit, the profits are much smaller than the losses. So let's take an example, pound against the dollar. So let's take a look. Pound against the dollar back here, they were right slightly more than 50% of the time. Okay, but if we look at profits achieved, so the average profit is about 38 points and the average loss is about 62, 63 points. So not quite twice. The loss is twice the average profit, but it's not good. If we look at pound against the New Zealand dollar, that is more extreme. 42 points or so average profit and about 82, 83 points average loss. That is almost double. And it just shows you there's no market here where the profit is bigger, the average profit is bigger than the average loss. So if you're only right 50, 60% of the time, but your losses are 1.8 times bigger than your profits, that's not a profitable strategy. Okay, and it goes back to what I discussed right at the beginning, that people cannot run profits and cannot take losses in a timely fashion. So what we have to do, it's just simple maths. If you're right 6 trades out of 10, and profits are £100 per trade, but your losses are £150 a trade, you've been right 60% of the time. So give yourself a pat on the back for accuracy. But your profits are 6 times 100 equals £600 profit. You've lost £150 on the trades that have gone wrong. So you've lost £600. You haven't made any money. And you're probably not going to be right 6 times out of 10. So it's absolutely critical. You know, if there's one thing you go away with after watching this video, it's not about what indicators or Fibonacci or Elliott wave or any of that nonsense. It's all about getting that balance between profits and losses correct. And you have to put yourself in a position where you can run your profits and cut your losses. Otherwise, you're just a fugitive from the maths. So in my own trading, so many trades are just noise. You know, there's it goes up a bit, it goes down a bit like the S&P this week. You know, 3 days of choppiness. So I might have, if I did 20 trades in a month, I might have 9 winners, 9 losers. So 18 trades effectively cancel each other out. Then maybe there are 2 that go on to make double or more of the risk and make the month. And that's very much how my trading tends to turn out. You know, it's a couple of big winners that can make a difference to the overall P&L. But you've got to put yourself in the position in the first place to have the opportunity of a significant winner. And if you're jumping out of trades too quickly, you're never giving it the time to develop into a bigger winning trade. So what I would say is, if we want to do that, we need to be patient. You know, we have to have the patience for these trades to turn out to be big winners. So it's having the discipline to have our stop in place and get stopped out if the market doesn't go the way we thought it was going to go. When the market starts to move in our favour, don't have an itchy trigger finger and be ready to jump out the trade. Give the trade time to develop. And then we may have a chance to be a profitable trader. But if we're jumping in and out too short term and not giving trades time to develop, then we won't be. I think we can all do ourselves a big favour by looking at the next time frame up. You know, if I'm looking at a chart of the S&P on a 10-minute candle like I am now, it all looks very exciting. Lots of swings today, isn't it very exciting? If I take a step back and look at the hourly chart, well, I can see if I want to place a stop loss, where do I want to place it? Well, perhaps the other side of this major low that's been in place for the last couple of weeks or so. So taking a step out and looking at the bigger picture can give us a more patient and more considered approach to our trading. That's it for this video. I hope you found it useful. If it's the first time you've come to the channel, welcome along. I run regular live streams on a Friday looking at markets, and then the odd video release throughout the month of interesting things out there like this video. If you do like the video, I hope you've liked and subscribed, all of that stuff to keep YouTube happy. If you'd like to try out the WhatsApp group, just go to the website and use the code 20 to sign up, and you'll get a 20% discount off the first month's subscription, and you get all the stuff associated with the WhatsApp group and exclusive webinars, you know, updates all the way through the day from me, trades I'm running, markets I'm watching, all of that sort of stuff. And any questions, either leave them in the comments below or send me an email to dj@davidjonestrading.co.uk. I hope you found this video useful. You know, I've been trading for a long time, and I've been through all the hoops, I think, like plenty of us have, trying to find a magic system, realizing after a long time there isn't one, and there's a bit more to trading than just what settings your stochastics have. So I hope this will be useful for you in your own trading. I'm going to wrap it up there. So in the meantime, until the next video, good luck with your trading.